It was a brutal day for U.S. stocks. Disappointing employment figures coming out at 8:30, a major reason for the sell-off. Deborah Kostroun is at the New York Stock Exchange with more. Deborah, no surprise today, jobs report was the culprit, right?
Certainly was the culprit. And, you know, one of the things that we did see going into the close, a lot of selling into the close. That's very bearish. Certainly not a good sign, and also not a good sign, the Dow closing below 10,000. That's just a psychological area of the market. And the S&P also closing at its lowest level since February 8th. We only saw 3 stocks in the S&P that were higher as we closed out. And this was all on this disappointing jobs report that had the markets in a tailspin, because that just raised concerns about the economy. And economists say that it really just tells us that the economy is just not there yet in terms of being able to rely on the private sector to drive the economy when all of the government stimulus dries up. And all of this led to some selling in some of the big name industrials like GE, Caterpillar, and even some of the railroad stocks like CSX and Norfolk Southern. Pimm.
Now, Deborah, almost impossible to find any winners in U.S. equities today because the selling, well, just encompassed everything, right? Commodities, materials. What about crude oil, the biggest fall in 4 months?
Yeah, and we've raised all these questions about the recovery, and not only because of the European debt situation. We were certainly reminded of that as well in Friday's session with Hungary's economic woes, and that just added more fuel to the fire that the economy is just not as strong as we believe. And when you have questions about the strength of the economy, it raises questions about demand for things like oil and metals. And crude oil, yes, falling to nearly $71 a barrel, biggest tumble in 4 months, metal prices plunging, and that also led to selling in the material stocks like Alcoa and also Nucor Steel.
But, Deborah, what are strategists saying about growth? I mean, after the jobs report, does everybody change their mind and their estimates?
Well, it looks like it, at least from some of the initial indications, because there was a lot of chatter going on today, because traders are saying that we've been expecting a more robust recovery, and people might be cutting down all those projections because today's jobs report really put a damper on the growth story. We're also just kind of a victim of uncertainty, something we've been seeing for months now with the European situation, and traders saying that maybe the stock market got ahead of itself because we thought the economic recovery was further along than where we really are. Pimm, back to you.
Thank you very much. Deborah Kostroun reporting from the NYSE.